Michael, when you look at and you hear about Amazon's results, what is it really a read on? Is it a read on cloud spending or is it a read on the consumer?
Well, right now, Amazon has over 50% of the U.S. cloud market. And that's likely to continue to grow. If you look at that compared to Microsoft, Microsoft's growth was over 70% in their Azure, their cloud revenue. So we can expect to continue to grow. I mean, part of what everybody forgets is we're hitting the law of large numbers. That on an absolute dollars, the amount of money that Amazon is adding each quarter is astounding. It's just we're coming off of a base. And so while they may disappoint a lot, this is extraordinary performance.
Paul, obviously we have that AWS number there, $7.43 billion. Questions have been raised, however, because we've seen spottiness in other companies when they talk about data centers and the cloud. Some seem to be doing really well, some seem to be struggling. Is there like a secular slowdown here where this sort of, I guess, as he put it, we're sort of reaching the limit of growth for this area, or is there still a lot of runway with it?
I still think there's a lot of runway here in the cloud. I think when we got the NVIDIA results earlier in the week, Intel talking about some weak CapEx spending coming out of some of their customers on the chip side, that kind of raised the concern of maybe have we reached peak cloud, if you will.
Right.
So I think the Microsoft numbers were very good. I think these cloud numbers came in slightly above where the street was looking. So structurally, that is still the area within tech where a lot of the CapEx is being spent. I don't expect that to change. But clearly, as Michael mentioned, the law of large numbers is catching up to it. But still, it is still one of the fastest growing areas of tech right now.
And it's interesting also how much perhaps certain calendar things are going to be baked into this previous quarter. We had Whole Foods for the first time being wrapped in terms of its quarter, and amortization schedule on Amazon Prime. You're a man with great expertise when it comes to content. How much is Amazon leading a charge when it comes to managing to win people over with content and get on board in Amazon Prime?
Well, they're already having hit shows. I mean, we have the Marvelous Mrs. Maisel. We have other shows that are winning critical acclaim as well as a lot of viewers. I mean, one of the things from a media perspective that I find amazing is their advertising business is hit $4.5 billion in revenue, and that's up from zero. I mean, if you look at a number of these companies, Apple also, they're now finding their way into new businesses that were not part of their core. Apple's Apple services business is growing at a much faster rate than the rest of the business.
And something worth noting, too, so we see now the stock is gaining a bit after hours, not dramatically, but it had rebounded 30% since its low last year. So we're looking at a major snapback for a giant company and obviously some relief here.
Yeah, I think when you look at the FANG stocks, including Apple, so the AA FANG, if you will, they obviously led the market lower in that December route that we had, down 40%, some of these big high quality names, and they've since retraced about half of those losses pretty much across the board. I think if you talk to FANG investors or just tech investors, they probably feel the most comfortable with Amazon amongst those names because it is a play on just the growth of e-commerce, not the consumer, not retail sales, but e-commerce as a percentage of total retail sales, plus the cloud, plus the advertising. There's lots of areas of growth there, and the company has a pass from Wall Street to invest whatever they need to invest to drive their business.
Every one of these FANG companies faces some sort of regulatory risk. That's one of the things we've learned over the last year. Where does Amazon's risk compare to, say, Facebook's, which is obviously very intense, at least from a PR standpoint?
I think that Amazon's risk really comes from, it's less of some sort of a legislative or policy issues. I think that they just reach a point, the business is transitioning. It's transitioning from a retail business where they take inventory risks to a business where they're a platform and they're selling for third-party sellers. So there are a lot of people who are going to be worried about the quality of those third-party sellers, whether it's counterfeit goods or them being able to maintain that quality control. It's very different than the issues facing Google and Facebook.
But also political risk as well. Jeff Bezos often comes under fire from President Trump because he owns the Washington Post, and President Trump doesn't like the coverage of the Washington Post that has of him. So, Paul, doesn't that figure into how you assess Amazon's risks?
Yeah, a little bit. I think there's some issue there. There's some issue with, believe me, taxes, where the various of their customers pay taxes, and Amazon, where does it pay taxes because of that? So that is something that's always been hanging over the company. They've been able to negotiate that. But as Michael mentioned, they're not dealing really with consumer privacy data, consumer data privacy and security issues as much as I think social networks are of Facebook and big giant advertising behemoths like Google are. But as Amazon becomes bigger in the advertising business, they're going to face some of those issues that the other advertising platforms are facing.
I think it's interesting to note that they're also a company that's now giving jam today. This was always a company where you waited for profit. It was all about the revenue. But now we're starting to get the guidance that first quarter operating income will be $2.3 to $3.3 billion. The estimates were $3 billion. So we're seeing really giving back to the market in terms of we will protect our profitability. This is a company now that can rake in revenue, but also start to really ring the overall bottom line as well.
I'm looking at these comments from Jeff Bezos in the letter where he's talking about Alexa. Customers spoke to Alexa tens of billions more times in 2018. You know what I love about Amazon is they give these numbers, you have no context for them. You don't know what the baseline is. They're sort of famous, but it does seem impressive.
Yeah, I mean, what's going to be even more impressive is to see what they're doing. The last wave was around voice with Alexa. The next wave is around vision with Ring and some of the other cameras that they're putting in. So as they begin to embed more AI, more smart assistants, it's going to continue to drive not just the growth of those devices, but also of the core e-commerce business.
Is Alexa something that can go across Amazon's different businesses, Paul, or is it something that's going to be housed on its own as its own unit?
No, this is going to be very much a big driver of e-commerce growth. Alexa, buy me, Alexa, I want to buy XYZ, and it's all driven. Everything that you see coming out of Amazon, whether it's a movie or a TV show or a piece of hardware or a truck going down the street or a plane flying, it's all to drive the e-commerce traffic. And that's what Amazon Prime really is. It is a incentive to drive more traffic to the e-commerce platform. We know that Amazon Prime customers spend a lot more than the average customer, and so it's all about that, and that's his strategy.
I'm interested in the dominance of AWS still as well. I mean, holding steady, 46% growth overall. Yeah. Michael, your perspective on also how much this is going to damage the overall chip ecosystem as well. We were just talking about Intel, the challenges ahead, and Ian King is saying the challenge is Amazon's going to start making its own chips at some point. And how much is this company not only going to disrupt the retail businesses, but also the entire supply chain when it comes to data and indeed to chips?
Yeah, I mean, there's a difference between AWS and being in a position where it's able to take its capacity and serve other companies versus trying to get into businesses to compete against Intel and Qualcomm. That's a business that's really far apart from their core competency. So they may create chips for their own devices, but really competing against the largest chip making companies, I think I'd be worried about a business that is really hitting up against the upper limits of growth and their ability to innovate.